Hey guys, Tony Benson here with Wealth Builders HQ and creator of Patterns in a Flash. We're going to go back and look at the patterns of the week from last week and what else is on the radar from the previous patterns of the week. But first, the disclaimer. I'm not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. So we're going to take a look back at, where did it go? Mouse is in the wrong spot. There we go. ENPH was a broadening pattern, NEM is a double bottom, and Tesla is a triple top, and every single one of these right now is working out beautifully. There's ENPH. Broadening pattern, which is typically very difficult to trade. It's almost impossible. In fact, I can't remember the last time that I've seen one of these actually present a trading opportunity. And I've been at this over 22 years now. 22 and a half, actually. 22 and a half. Exactly 22 and a half just a couple of days ago. It was April 3rd and 4th of 2000 when I started. 22 years and 6 months and 3 days ago. I'm a little weird like that. Anyway, so yeah, broadening patterns, first of all, they don't show up very often. Second of all, they're very difficult to play usually because by the time it gets to the lower line, it's usually so far down, it's dropped so quickly that it's probably likely to bounce. So it doesn't usually present a good opportunity. This is a rare one. The pattern itself is rare anyway, but this one is actually giving us a good opportunity. And if it doesn't tank tomorrow and it pops back up a little bit, I'd be interested. I did not catch that, unfortunately, the move yesterday, which is always frustrating, but I've got so many other trades on right now, and there's so much stuff going on. You got to manage how many you put on. And it's frustrating missing them, but it's part of the nature of the beast. You'll never, ever, 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 ever have enough cash or enough mental capacity to do all the trades you can find. Because I find anywhere from 10 or 15 or 20 new potential trades every week. And I've got 6 or 8 or 9 on right now. And I usually try to keep it between 5 and 10. If I get over 10, it gets hard to manage. So you can't do every single one of them. So I try to pick the cream of the crop and the best of the best. So jumping to NEM now, this is a little double bottom that still has some potential actually. It just broke the midpoint a couple of days ago. Had a nice little pullback yesterday. Today it rallied with light volume, which is not promising, but who knows? And typically gold in recessionary periods does well, but the entire commodities market has been getting beat down, and you can see that this thing ran from a high of, there's a beautiful evening star. This is why we look at patterns, right? That is a beautiful textbook evening star. This big drop gave us a huge momentum, and realistically could have waited for that thing to settle in and put a hook down here below and catch that, 69 down to basically 62, and then done it again down here. And anyway, woulda, shoulda, coulda, right? It's too late now. But we've got a beautiful pattern on the downside, and I remember looking at this a couple weeks ago, and I go, 40 is a decent floor for this thing. I wouldn't be surprised to see it go up. So I'm a little cranky that I didn't get in before. But at the same time, the pattern didn't play out. And I've learned through hard knocks in 22 plus years, 22 and a half years in 3 days, that it's better to wait for the pattern to play out. So, and sometimes it works out. Sometimes I do jump in early. But if I do, I usually do it with just a really small position. So, and Tesla is the opposite of NEM. It is a triple top. It actually originally, that vertical line is where we originally looked at it as a double top. And said if it breaks this midpoint right here, which is that line, then it's probably going lower. And I got in on, I believe, that day right there. I stopped out of half the position here, and it moved so quickly, I was like, eee. But I held on. It was only one contract, so it wasn't a lot of risk, right? I didn't have a huge position, so I was willing to take a little bit of a bath if I needed to. And I remember getting back into it. I added some to it, I think, right here at 300. This day right here is where I took that out with like a $4 or $5 profit. I took like a $2 or $3 hit here and re-added it this day. The next day I banked $3 or $4 on the other contractor. I think I added 2 there. And I took half of it out with a $4 profit, $4 of profit. So the little bit that I lost on the stop, I'd made up with this 1 day move. And I think I remember adding 2. I can't remember. I have to go back and look. But then it rallied back up and hit the spot. We had these 2, basically a tweezer top, and I went, okay, this is where to add in. So I added a bunch in right here. And then I got some more here, and I can't remember exactly what I've been doing here, but I know that I have 3 contracts left. I've been jockeying in and out of this the whole time. I've got 3 contracts left right now, and my cost basis is it's probably about $9 or $10. It's $11 is what it shows that I paid for the ones that I have. But I know that I plucked some profit out of here on some other ones jockeying in and out of them. So I'm probably around $9 or $10 cost basis. And it's already, I left it. When it gapped down through the target, I said, okay, I have an order out there for one contract at $23, one contract at $27. And if it drops a decent amount tomorrow, they'll hit. One will hit for sure. The other one will hit. And then I'm planning on if they both hit, because I will have all of my profit plus a couple $1,000 of profit and still have one contract there. And I'll hold that through earnings, which is, I believe, on the 19th. Because I've already got all my profit and then some. I've got all my initial capital back and a healthy profit. With, I think the most contracts I've had is 4 or 5 on this. So it's not a monster trade. But if I've got a couple $1,000 when I've only been exposed $3,000 or $4,000 or $5,000 at a time, it's no big deal, right? So we'll see what happens. And if Tesla comes out with really bad news for earnings, if that happens to play out that way, then that'll be beautiful. I got a similar situation on IBM. But anyway, I'm getting way off. I'm getting excited about this because this thing is just doing awesome. We got a triple top on it, right? That's what we looked at. And the midpoint of the triple top's right here. And even if you would have gotten in right here, it would have been beautiful. Because you'd still be up. I mean, you'd be getting in about 268, and it's now 238. It's dropped 60 points. So those three from last week are beautiful. Already playing out or close to playing out. BK, this is another one that is still kind of on the radar. Descending triangle. It's back above that support, but if it breaks back below there, I will be interested in it. And CFG, this is another symmetrical triangle, which we don't see them very often like this in a bear market. Bull markets, they're fairly common. Bear markets like this, they're not common at all. But this one is nice. Textbook, and there's still possibly some opportunity there. Fortinet. This one, if it rolled over and broke through that bottom, but that could be a ways out. This will probably come off next week. I mean, there is the possibility of a double bottom. If it breaks through this, we could go here, but that downtrend line is very solid. So I wouldn't, 56 to 58, 59, it's not worth the risk for me. MGM, this is another one that we had a double top, right? This is where I looked at it. We had a little miniature head and shoulders. There's the midpoint. Now we have a double top. There's the midpoint. It broke through that. And now we're back up at this in this same area. We've got that old resistance there about 34. So if it rolls back over, then I'd be interested in possibly a move to the downside, which is weird because what's the other? Not Win. Maybe it is Win. Win. I think it was Win that's in an inverted head and shoulders, and Las Vegas Sands made a bullish breakout to the upside, which is really weird because you'd think in a bad economy the casinos would not be doing well. And I don't know why their stocks are popping, but they are. And then Merck, there's the head and shoulders that is still on the radar. So we'll keep an eye out for that and see how things play out with Merck. So that is it for the review. And let's wrap it up the way we're supposed to. As you should know by now, trading is not exactly easy. It is simple, but it is not easy. It is difficult. But the ultimate question is it worth it? And I already know the answer for me, but the question for you is it worth it for you? It is difficult. It's challenging. You're going to have good days. You're going to have bad days. You're going to have good weeks, good months, good years, bad years. Welcome to life. But if you keep plugging along, you'll get there. So just remember, if you're going to fail at one thing, fail at quitting. Take care. God bless.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here. And hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.